following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. And this is a really key Astro Bradley date, August the 3rd. We also had one on July 30th. Had the full moon on July 31st, which was absolutely spectacular. That was a blue moon. They had some incredible pictures of it over New York City, showing the hue of the moon being blue over the Statue of Liberty. It was really spectacular. And also, this is a Bradley date, along with a bunch of other things that are happening. Now, the first chart that I've posted into the room today is a study of the Fear-Greed Index. It's a little more complicated. Well, it's a lot more complicated than the VIX index that I use because it has 7 components, of which the VIX happens to be one. And as you can see, we're in a fear mode. There is not the same thing that we're seeing with the VIX index itself. So there's a discrepancy here from what I'm looking at to what this is showing. But I have to use the VIX index for 2 reasons. One is Basil describes it better than anything that I've seen, and the second thing is I can see it technically in the charts, what the patterns are doing, and that's what I'm trying to do. So I've looked at the VIX index, and as you can see, we're right at New Year's yearly lows, which means there's very little fear based on what this index is saying. But remember, this is only part of what the market is actually doing. In addition, we have a situation where we have the bulls and bears have shifted. A lot of people that were bullish are no longer bullish anymore, and that also is a negative to the market, going down from these levels. But, we'll have to wait and see that we're at a real critical level. I don't think that is any question in my mind if that means anything or not. But let's take a quick look. We had something historical happen over in the last few weeks here that I wanted to bring to your attention. And if I can just find it, where did I do it? Oh, dear. I have these all set up, and when I'm getting ready to pull them up, I've got so many of them to talk about that I can't find the one that I actually want to do, and that's the most difficult part of finding. But I found it. This takes a little bit of time. I had it right in front of me. That's strange why I would put it there. Okay, now this is an interesting one because this is all technical, folks. Remember, this has I'm not doing anything related to fundamentals at all. This is all related to technical things and the history of the market and the patterns of what I'm looking at. I don't understand quantitative easing, but basically what this chart is showing you, going over the last 65 years, going back to 1950, there have been 6 instances where the Dow Jones Industrials went far above where the Dow Jones Transportations and the Dow Jones Utilities were doing. And of those 6 times, 5 of them led to a pretty significant correction. Some of them, like the one in 1980, the one that led to the low of 1974, the crash of 74. That's the one that bit me. And there was another one in 2000 when we had the same type of situation occurring. So, but 5 of the 6, did show. What this is showing you is that the Dow Jones Transportations and the Dow Jones Utilities are lagging the Dow Jones Industrial Average by a great deal. So that's going back over, 65 years, looking at what's happened. It's only happened 6 times, but that's what it is actually showing of what's going on at that particular time when we're watching these things move, up and down, and every day we watch them. Okay, we want to take a look now at what the transportation is doing right now in the market, and you'll be able to see that you can see this downtrend that's been going on in the transportation. And this past week we just made an ABCD correction at a 382, which was the 382 from the high we made back in December of 2019. This is the second ABCD pattern that we had. We had another one in April. So this is the second one. So this is going to be indicative of whether the market turns from here or not, because if these utilities and the Dow Jones Transportation start to change, then you're going to be looking at a situation where, the market is probably going to go up more, and it's not going to be smart to be short, but we'll have to wait and see what happens here today and tomorrow, in fact, all this week. But you'll see that the Dow Jones Utilities also has made a 382 retracement from the high on 2015. Whether that means anything or not, but the fact that it's happening on a key Bradley date is very, very important. In my opinion. Now I'm going to do something a little different here. One of our subscribers that follows the Bradley model brought me some information that I think is it is very interesting. The question is what is the ramifications of it? And as we know, the Bradley model is a guideline, really, and it's very good with the dates, and sometimes it's very good with the trends. There's no question. If you look at this over a period of time, it does get you some really good spots. So what I've done here is I've actually put in one of our subscribers here at TFNN for the 24/7 asked if I would shift the Bradley, because he shifted the Bradley by 2 weeks. And if you'll notice that what's happened since that time, it's been a near perfect fit for the last 16 months. And if you did, that was just a shift of 2 weeks. And I don't know if that means anything or not, but it goes along with what I think is getting ready to happen. And we're going to have a big down here in August and September, and bottoming sometime in October. And of course, September and October being the 2 weakest months of the year, then that would the weakest months of the year, that would give another probability to tell us that, along with all the other things that we have with the divergences and the, between the transportations, utilities, the new highs to new lows, the advanced decline line, all of those things are what we're watching here. So we'll keep a really close eye on this. But if we close strongly above 2120 in the S&P, this model is certainly wrong. I'm certainly wrong, and we're probably going to have one big leg up to the upside. We'll have to let history tell us if that's going to be the case or not, but we'll wait and see. I will say that many more people are bullish than they are bearish, and if you throw in the neutral crowd, you'll see that there are very few people that are, but nobody as bearish as I am. And believe me, I'm probably totally wrong, but that's just the way it goes. I wanted to show you the chart from 1987, because this was the advanced decline line that we had in 1987. If you'll notice, in August of 87, on August the 25th, 1987, we had that 5-planet conjunction. All of them were in the sign of Leo. That was known as harmonic convergence. That was supposed to be the end of the world, but fortunately, we've been able to survive another 28 years. But you'll notice that the advanced decline line did not make new highs from March. Then it broke down into September. We rallied into October with the advanced decline line turning, and then it turned down, and then it dropped, for the next, two weeks down into the greatest buying opportunity of the 1980s, which was the crash of 1980. So, boy, when they talk about it as being the greatest buying opportunity at all time, folks, it had to be, because you really had to be bullish to buy down there. And as a matter of fact, one thing I remember most vividly, because I run through the statistics of highs and lows, on that day, on October the 19th, I believe at that time we were trading on the New York Stock Exchange about 1,600 issues, and I believe there were only 13 stocks out of 1,600 that were up that day. And if you would have bought any of those 13 stocks, they did far better than the rest of the market. And if you think about it, it makes perfect sense. If you can't get a stock to go down when the rest of the market is down 22%, and all hell is breaking loose, you must really, really believe that stock is going to go higher. And that's exactly what happened to those 13 stocks. And so if that ever happens again, watch it, and watch the ones that don't go down, because those are the ones that bounce back, the furthest when they finally do bounce. Now we're having a big collapse here. This not a big collapse, but we're making new lows in some of the commodities, beans, corn, wheat. We've been cautious about that for a long time. We had a pretty good run in the beans and the corn to the upside. They stopped right where they should have at the 61% retracement, and now they're appearing to go down and breaking below all major support that we have coming up, that we had back at 903 in the beans and November beans. And so that means we're still in a pretty good bear market there. If we take a look at the gold is doing pretty much what we expected it to do. It hasn't gone up much, hasn't dropped much as of yet. We should still have some support at the 1085 level, but that would be the one that it has to hold above that level. Otherwise, you're going to be looking at something that is going to be a whole lot more sinister in that. We'll take a quick look at silver here, because you'll see that silver has held the lows so far, but the open interest and the commitment of traders tell us that we have so many people on the short side of the gold and silver that we really need to focus on, what's going to happen with that over a long period of time. I'm going to put the gold here. I'm going to do it live so we can see where we are, because we're sitting right at a 61% retracement right now in gold. And that is what we've done here over the last day or so. There we go. Let me blow it up just a little bit. Too much. Okay, now we've got it. And we'll put it in here. And you can see we're just sitting here right at the 61% retracement at 1088. I'm not sure whether that's going to hold because of the overall weakness that we're having in copper, platinum, palladium, silver, soybeans, wheat, corn. I mean, there's just a lot of selling coming in, and that means that the people that are selling these commodities are having extra money to buy stocks, and that looks like what's going to be happening today. We'll probably have a big run in these things, one more big run to the upside, and then we'll see what the next leg is going to be here. Now, I wanted to show you a couple of things that, as far as the numbers that we hit on Friday, were quite interesting, because we were able to, on Friday, we did make a beautiful 61% retracement of the down move from July the 20th. We came down, we rallied up into the exact 61% retracement. It was also the exact 78% retracement of the high from the 24th of July, and that's at 46.08. We're 40 points below that, but if we take that out, we are most probably going to go a great deal higher. That's the bottom line of what we're looking at. If we take a look at the New York Stock Exchange Index, we did something similar, but it was much less profound because it's far, far weaker than the NASDAQ. I'm going to take a break here to pay a few bills, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got another market that deserves our attention here. It's the Treasury notes and Treasury bond market. We are at the moment of truth here in the bonds. If you'll notice here, since we made our bottom back on June the 26th, we've been in an uptrend here. We've now completed the big ABCD move. We've taken out the highs of June. We have just barely done that in the notes. As you can see, the bonds have gone, far above these levels, but we're coming into an area between 157 and where we are right now at 156.15, where we should run into some pretty interesting resistance, because longer term, this is still down, and we've had a very strong rally here over the past 5 weeks, but it's at the moment of truth. These are the types of trades that you like to look at because you don't have to risk very much. If this gets much above 157, you're certainly going to be wrong, and the Treasury notes look actually a little worse than we're looking at in the bonds, but it still is, they have broken out above the July highs, but they really haven't done anything as of yet. That's still early because, we don't really know whether they're going to keep running or not, but we'll have to let the markets telling us that. But even then, we're still just making another ABCD pattern on a down move in the Treasury bonds. We have the same thing happened in the German Bund. It's been weaker than the bonds and our notes because they haven't been able to take out last week's highs as of yet. They're close to it, but they haven't been able to take it out as of yet. So this is another one that you want to keep an eye on here with the bonds and the notes, because we could certainly do this. With collapsing commodity prices, folks, that used to mean that the business was slowing down, and when you look at the transportation and utilities, that certainly tell us that somebody's not been using as much utilities as they had been, nor have they been shipping stuff like they have been. But this could be a different situation because of quantitative easing, and we'll see if that is going to be the case. But that's what we're looking at, so far, in the thing. I've been asked to show the chart of the bulls and bears that I was looking at. I get my information from Decision Point because of they do a really good job with the statistics, and they're very, very accurate. But I'll forward it to you and let you take a look at it here. But you'll notice that there are not many people bullish here, and this could be the reason where you get another rally. And maybe it's just a short covering rally, but as you know, these things can go quite far. We've rallied up to a 61% retracement in the NASDAQ. We went to a 786 retracement in the Dow Jones, S&P 500. The Dow Jones has made a 38% retracement of the move, as has the what was the other one? I can't think of that. Well, those were the main ones. Anyway, the New York Stock Exchange Index has also made a 38% retracement since the bottom. So we'll see, what this rally is going to bring us. This is really a key cycle date, no matter how you look at it from the standpoint of looking at the things that I do with the astrology things, and then also the things from sacred geometry where you do number counts. And we have some really strong number counts from July 30th through today, and that means that if we're strong this week, even today today you could still be strong, but if you're still strong tomorrow, we're probably going to go up, and we'll see how much it's going to move from that distance. Now we have another market that we follow here, which is the German DAX, and I wanted to just give you an idea of what we're doing there, because we've reached some really important levels here in the German DAX. We're not very far away from the 61% retracement of the whole move down in the German DAX, and we've completed an ABCD pattern. That's we watch the ratios come first, of course, and the patterns come second, but we have completed the ABCD pattern in the DAX. In addition, we're not very far away. We're only 50 points away in the DAX from the 61% retracement, and the DAX actually opened lower and made a 50% retracement of the low from Friday, and then started its move higher, and it's been going up. It's up from its low. It's up over 250 points, which is a 2% move. 2%, almost 2% move in the German market, whereas we're setting here, basically flat. So that's another one that I sort of watch just to see what's going on. The real problem here, folks, is in this commodity markets. I mean, they're being run over by a freight train. So, and the freight train's still coming. Okay, we'll take a little break here, pay a few bills, and we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and this U.S. dollar is one of the things that is making these commodity markets, causing a great deal of trouble. And we want to keep an eye on this. I wanted to bring up one that we're watching, and that is really heavily related to oil and mining, and that is the Canadian dollar. As you can see here, we have now taken out the highs from 2009, and that's a situation where we could go a lot higher. But you're looking at on a shorter term basis here, you'll notice that we're really approaching the 1.618 expansion number up around the 3160 level, and we hit that last night. We hit the 3180 level, and that was telling us that we're probably getting ready to maybe even go even higher. I'll show you this on a shorter time frame so that you can take a look at it, and you'll notice that that's where we are. Just give me 1 second to get the hourly chart up, and you'll be able to see that we did get up into that zone area, and we're still right in that area. But this is about the only hope that the commodity markets have. If this U.S. dollar would happen to turn down, we're having the same thing happen in the Australian dollar. You know, it's making multi-year lows also. And here again, you're looking at commodities because Australia sells most of their stuff to China. So there's a big question of how much China is buying. We'll see. The Chinese market was down just a little bit last night. The Greek market had a little bit of a sell-off. I heard that it was down 30%. I don't know if that's the case or not, but that's a huge drop. So I don't know if that's going to mean anything or not, but we'll wait and see. We now have these Treasury bonds are now getting up to the upper range of where they should be stopping right in here with this 156.20 area. If we get much above 157, then there's going to be probably another move on Treasury bonds. It will probably take it down to the take it up above 158 possibly, but right now it's at the absolute moment of truth here in the bonds, and we'll I've already posted that chart in there showing you the importance of 156.28 to 156.30, and that's where we're trading at 156.28 right now. So we'll watch to see if that's going to happen. Longer term interest rates are going higher. It's a question of if or when, not if. The Fed has already told us that they're going to raise rates, and I don't think raising rates means anything to the markets. I think quantitative easing made more than anything else, and I'm not sure how we're going to work out of quantitative easing, but we'll have to wait and see. I'm just looking at numbers, folks, and this correction that we had Friday came right into the wheelhouse of the 61% retracement in the NASDAQ, spot on. We just missed the 786 in the S&P 500 by two points. It should have come in at 2111. The high was 2108.75. We're about 10 points under that right now. So whether that means anything or not, I don't know. But we're over this cycle date, so we'll see what's going to happen with the rest of the day, and we'll go from there. So we are right in this really important level in the Treasury bonds. If you see a print above 157.04, that tells us that this thing is most probably wrong, and we're going to go a great deal high. Well, we're going to go higher in bonds. Great deal, I'm not sure, because we're still lagging in the German bund. Let's just see if that German bund has taken out the highs of the last few days. And believe me, that's a very large, yes, they finally did it. And I'll put this in so you can see that the German bund is able to take that out by just a little bit. So the German bund finally was able to take out the July highs by just a little bit. So we'll see what's going to go on, you know, with the bund at this area. But the bunds have been up for three weeks without a correction. That's pretty much what we've done in the Treasury bonds, and also the Treasury notes are doing the same thing. Let me put the note chart up, and we'll take a quick look at that. And I want to spend some time with some commodities here, because we're really below some really key levels of support. Not surprisingly, because once they break these key numbers, they go always, well, not always, but most of the time they'll go down to the next number. If they break the 618, what do? They go down to the 786. So we'll see what's happening. We got the NASDAQ a little stronger today. The S&P's down just a little bit, so there's a little bit of a discrepancy here, mainly because probably they got some of these others. Now, if you look at the notes here, the notes have only been able to take out the previous day's high by a pip or two. They haven't really done very much at all, and they've been the weakest of the group through this area. So let's just watch this and see what happens throughout the day, and then we'll look at it a little bit differently the next time we take a look at it. Okay, now we want to take a look at the crude oil market, because that's the one that everyone talks about. It's related to the Canadian dollar and all the other things that are happening, and we are breaking down below 46. Oh dear, what happened to it? Oh, I had it right here. Please don't tell me I lost it. I did lose it. Oh dear. Oh, I've got to bring the crude oil back up again. 1 second. Okay. It'll only be a second. I got to get to the CLs and I'll be all right. There we go. Okay, hold on 1 second here. And we'll be ready to bring this up here. In fact, we are breaking below the 786 now in the oh, it did come up. Sorry, it popped up. Anyway, as you can see here, we've broken down now below the 786 retracement, which we were sort of expecting. And the reason for that is the 61% retracement only held it for a day, and the 786 retracement only held it for 2 days. And now, you know, we're heading down. We're probably going to go down and test the $42 per barrel low in the oil. That's what it looks like from that perspective. So we'll see what happens from that level. But anyway, that's what we're watching here with the crude oil. Now we've also had a request to take a look at the soybean market, and we had one heck of a move there early, but boy, it gave up the ghost, and at the 618, as a matter of fact. So there was not a surprise there. There were a lot of things happening at that point. We've corrected more than 78% of the move down in November soybeans. That came in at 931. We're now trading at 928. So that tells us we're probably still going to go a little bit lower. And when the market broke, corn was the first to break because it stopped exactly at the 61% retracement of the high from last year. That was at 443 a bushel, and now we're trading substantially below $4 a barrel, $4 a bushel now in the corn, and it looks like it's going to go. And we've got a big crop coming. As you recall, we've had Rich Anderson on, and he told us we had a greenhouse effect going on across the growing season with really warm temperatures and a great deal of water. So that was an ideal situation for growing beans and corn. But the beans are still in the pollination stage. If something really drastic happens here, we'll see what's going on. Now, one of the reasons why I put this chart up was to show you this green line that you can see, this trend line that's been going on since November. You'll notice that we hit that line at 931, and we rallied 22 cents in beans up to 955. And now we've come back and we've gone below that line, and that's the 20-man line. That line should have bounced the beans at least 50 or 60 cents. It could only rally 25 cents, again showing that there was a great deal of weakness coming in here. So I have to agree with John Logan. These things look like they want to go lower. I mean, you look at wheat, beans, and corn. All look to be lower to me. They just don't have any pattern here to tell us that we're ready for a bounce. So you just have to, pick out something else to trade, or I'll try to find a place to sell it short, which is difficult when, it's just falls and falls and falls with no bounces. So that's the key to, what we're watching here with these grains, and the metals are the same. We've looked at the gold and silver. Silver so far is still down on the day, as is gold. Gold has held a 61% retracement at 1088 so far, and I still believe we've got a chance, for that one to have a pretty good rally, but that's still a little bit early in the move. We had a situation where we had a whole bunch of patterns that I haven't been able to update these as of yet, but we had a whole bunch of patterns known as island reversal patterns and shooting star patterns. Looks like because the market's opening a bit higher that these are not going to happen, but we had one in Pfizer. As you can see, we had a big shooting star in Pfizer that was going on. We had another one, a shooting star, which also was in Amgen. Was also the same thing, but you needed it to gap down, and when they don't gap down, that shooting star is not valid today. You have to wait until tomorrow to see if that is going to have happened. We had another one also occur with Mickey D. McDonald's, and you'll see that it also had a shooting star pattern that was there, and so there were about 5 or 6. Those were the main ones that I looked at because they were Dow stocks. And, well, the McDonald's and the Pfizer were certainly Dow stocks. The Amgen was a NASDAQ stock, and it is a in the biotech index also. So we've had a request to take a look at the biotech. So we will do that right now, and we'll see what's happening. And hold on one second here. We'll go to the old biotech index, IBB or BIB or what it is. Hello, there. Uh-oh. Wow, can't find it. Just a minute. There we go. Got too many things I'm looking at here. We're almost at 150. Well, we hit 157 in the bonds, 157.04, and I will have to say that this is probably going to go the other way. Okay, this island reversal that we've had in the IBB is still present. We're down just a tad today, but it's still very, very early in the morning, and there's not really much you can hang your hat on at this time of the morning to see if it's going to do anything. But we'll wait and see, what's going to happen, with the IBB. I've also had a request to take a look at the most popular stock in the world, which happens to be Apple. And boy, this stock really gets a lot of free publicity. I mean, they are in the news all the time. And it's up a little bit today after we had a little bit of a down day yesterday. But it really appears to me we had the big gap down after the earnings report. And it appears to me that we want to be looking at around the 116 level in Apple because that's a perfect ABCD pattern coming in at that time. And the BC leg was 382 of the AB leg, which tells you that it's important. And then you gap down after the 382, also giving you confirmation. Then you took out the C point, which is giving you confirmation. So if this doesn't make the ABCD leg, it's going to be very surprising because it's got everything there that you can ask for. A sharp move down, a 382 retracement, a gap after the 382 retracement, and the ABCD measures to 116. That's what it looks like in Apple. So keep that in mind, and we'll see what's going on. Okay. All right, so we got the bonds did hit, they hit 57.01. 57.04 is the number that I'm looking at in Treasury bonds. If we get above that, that's going to blow above the 1.618, and that's only a couple ticks above the 1.618. But that's what you have to look at when you're watching these particular things. So that's the main thing of what we want to keep focused on this morning, at least from a shorter term perspective in the interest rate markets. The next thing I wanted to cover was something about the longer term picture of this market, and that I have to believe that this is the thing that is really the canary in the coal mine that's going to cause all the problems, and that is this long-term chart on volatility where we've been over the past just a second here. There we go. Where we've been over the past 20 years, and we're at the lowest level of volatility ever, at the highest prices we've ever had, and with the largest margin debt that we've ever had. These are not good things, folks, from a long-term perspective. Even if you're, and I'm really bullish United States. It's hard to be bearish United States because we some of the greatest resources in the world. We have a screwed up political system, but that's been going on since 1776, and maybe they'll correct it. We'll see. But chances are we'll go through a period of turmoil before they ever do that. But this low volatility with this high prices is usually not a good factor. And we'll let history decide whether we're going to make that determination at all. So we're going to have to take a break here, I think, one more time. And then I want to share a chart here from my friend Bert Noman of Wellington Capital. And I just want to let you know that he's a very, very smart guy. I've known him about 45 years, and it shows, what the Dow has done, this past 7 months and where we're sitting at right now. We'll be right back after we pay a few bills.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and as Basil would say, we have a bifurcated market. Dow's down a little bit. New York Stock Exchange is up a small fraction, as is the NASDAQ, and the S&P is basically unchanged on the day to down just a fraction. Now, I wanted to switch over to foreign exchange here because this is where the real money moves. And as you can see here, this is the euro going back over the last 5 months. We've been in a downtrend. Our original target on this still remains at 106. We rallied up to the 61% retracement of the high in July. On Friday up at that 111 area, then we sold off a couple hundred pips, and we're just bouncing off that bottom right now. But this sets up a really nice pattern down to run the 106.80 level. But if we break below 105, the long-term target that we have here in the euro comes in at 99. This weekly chart on that is very, very specific that that's where it wants to go. The fact that we've only bounced 10 points from our low in March. It took 4 months for it to make 10 points, and it made that early, and it's just been consolidating to the downside all along, which means it's pointing lower from a technical standpoint down to the 99 level. I don't know whether this is related to what's happening in Greece or not, but their market was down over 25%. But remember, it hasn't been open for 5 or 6 weeks, and similar to what we have in China, where half of that market's closed for several weeks now. So these are interesting times that we live in, and the governments are going to try to control some of the, the damage that we have here. There are quite a few suicides happening in Hong Kong, people asphyxiating themselves by hanging, jumping out of buildings. This is not a good thing that you like to see in the news. You don't like to see anybody suffer anything, but when it happens because of money, it's even more absurd. But this is what happens. People get really tied up in the fear and greed thing. So we'll just wait and see what's occurring. Okay, so we have the gold still holding at our 61% retracement at 1088. It's rallied a couple of bucks off that bottom, but still relatively small. So we'll see what's going on. We got the NASDAQ almost at the 786 of yesterday's high.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.